Moo, wake up. Moo, go to field. Clover cheaper than yesterday. Moo think, moo, wait. Clover get cheaper tomorrow too. Moo, not buy clover. Moo, wait. Moo, starve. This is deflation. What is deflation? Cow want clover. Cow has grass, but clover cost less grass today than yesterday. So cow think, why buy now? Clover cheaper tomorrow. Every cow think same thing. No cow buy clover. Clover farmer sad. Clover farmer make less grass. Clover farmer fire other cow. Fired cow now has no grass. Fired cow definitely not buy clover. Clover get cheaper again, and again, and again. Heard, this is the deflation spiral, and it eat economy like cow eat cud, slow, wet, and ugly. Let Moo explain properly with numbers, because Moo went to pasture school. Deflation is when the general price level of goods and services falls over time, opposite of inflation. Sounds good, yes? Cheaper clover? Happy herd? Wrong. Deflation is measured by Consumer Price Index, CPI. When CPI go down month over month, that is deflation. Example, CPI drop from 100 to 97 over 12 months, that is 3% deflation rate. Here is why this make economists cry into hay. Problem 1. The waiting game. When prices fall, cows delay spending. Why buy barn today for 100 bundles of grass when barn cost 90 bundles next year? Rational cow wait, but if all cows wait, demand collapse. Businesses make no grass. Economy go very quiet, too quiet. Problem 2. Debt become monster. Heard, listen closely. This is the scary one. Moo borrow 1,000 bundles of grass from milk bank. Moo must repay 1,000 bundles. Deflation hit. Grass now worth more per unit because prices fall, but Moo's salary also fall because business make less grass, pay less grass. Same debt, less grass to pay it. Debt feel heavier. Economists call this real debt burden increasing. Problem 3. Milk bank problem. Central cow bank, let's call it the Federal Moo Reserve, normally fight recession by cutting interest rate. But if interest rate already near zero and deflation still happening, real interest rate become positive even with 0% nominal rate. Real rate equals nominal rate minus inflation rate. If nominal rate is 0% and inflation is minus 3%, deflation, real rate is actually plus 3%. Borrowing still expensive. Stimulus not work. Economists call this the zero lower bound problem. Moo call it very bad day. This exact thing happened in Japan, 1990 to 2000. They call it lost decade. Economy shrink. Asset prices collapse 60%. Consumer spending flatline. Country not recover properly for 30 years. Japan literally invent term deflation trap. Moo never want to visit deflation trap. Let follow Moo. Moo is average cow. Moo live in economy called 𝐶𝐈. Year is 2025. 𝐶𝐈 just have big bubble. Clover prices were very high. Everyone buy clover with borrowed grass. Milk bank raise interest rates to 5.25% to cool things down. Sound familiar, herd? Now, bubble pop. Step 1. Clover price fall. Moo bought clover field for 500,000 bundles of grass. Field now worth 380,000 bundles. Moo still owe milk bank 490,000 bundles. Moo technically underwater. Economists say Moo in negative equity. Moo not feel cute. Step 2. Moo boss make less grass. Moo work at clover processing factory. Factories sell less clover because all other cows also waiting for cheaper price. Revenue down 30%. Boss tell Moo, we restructuring. Moo fired. Moo now part of unemployment rate. which in deflation scenario can climb to 10%, 15%, even 25% in severe cases, like Great Depression 1929 to 1933, when U.S. unemployment hit 24.9%. Step 3. Moo try to borrow. Moo go to milk bank. Moo need emergency grass bridge loan. Moo say, give grass. Moo pay back. Milk bank look at Moo grazing score. Moo score was 720, good score. But Moo just lose job. Score drop to 580. Milk bank nervous. Milk bank offer loan at 11% APR with collateral requirement. Moo say, that much grass interest. Milk bank say, yes. Step 4. Moo spend nothing. Moo cut all spending. No new clover, no barn upgrade. Moo eat generic hay from discount pasture. Moo saving every blade of grass. Moo is being individually rational. But here is cruel joke of macroeconomics. Herd. Economists call it paradox of thrift, first described by John Maynard Keynes, very large cow, very famous economist, 1936. If every cow save at same time, total spending collapse, economy shrink more, and everyone end up worse than if no cow had saved. Individual logic, collective disaster. Moo saving grass. Moo destroying Cowmerica. Moo feel bad about this. Step 5. The farmers, government, panic. They try fiscal stimulus. They print more grass and give to herd. They build new infrastructure. They try to kickstart spending. But if deflation expectation already locked in, if herd believe clover will be cheaper tomorrow, stimulus not work as well. Herd still wait. Great bull in the sky is frustrated. Great bull print more grass anyway. Sometimes work, sometimes not. Historical success case, USA 2008 to 2009. Federal Reserve injects $700 billion stimulus via TARP. Also deploy quantitative easing, QE, buying assets to inject grass into system. Deflation narrowly avoided. Recovery slow but real. Historical failure case, again Japan 1990s. Stimulus deployed, multiple times. Deflation stay anyway, because herd not believe. Expectation is the whole game. Herd, moo need moment. Moo has 4 stomachs. 4. Moo can re-chew food multiple times, and still moo cannot digest the fact that Japan's central bank held negative interest rates from 2016 to 2024, literally charging banks to hold money, and deflation still kept coming back like bad hay. Negative interest rates. Milk banks say, we pay you to borrow grass. Cow say, no thank you. Cow still not spend. Economists stand in field. Wind blow. Someone cry. You know what is also deflation? The price of moo's self-worth after reading macroeconomics textbook. Herd now understand basic deflation, but moo want give herd full picture. 2 types of deflation exist, not same animal. Type 1, bad deflation. Demand collapse. Cows stop spending. Prices fall because economy shrinking. This is Japan. This is the Great Depression. This is the nightmare. Type 2, good deflation. Rare creature. Productivity increase. Technology make clover cheaper to produce. Prices fall, but economy growing. More clover for same grass. Everyone slightly happier.
Technology sector. In 1980, personal computing cost equivalent of $50,000 in today's grass. Now you buy laptop for $400. That is massive price deflation in technology. But tech sector grew. Employment grew. Innovation grew. This type deflation okay, maybe good. Economists distinguish using GDP growth rate. Good deflation come with positive GDP. Bad deflation come with GDP contraction, negative growth, recession territory. Cowmerica is currently watching very carefully. Fisher debt deflation theory. Moo favorite. Irving Fisher, 1933, explain mechanism perfectly. When asset prices fall, debtors try to pay off debt by selling assets. More selling equals more price falls. More price falls equals more debt burden, equals more selling. It is cow stampede, but financial and invisible and very bad. Fishers say only way to stop this is massive outside intervention, either by great bull in the sky, government spending, or Federal moo reserve, monetary policy. Left alone, Fisher believe debt deflation spiral end only in complete economic collapse. Moo find Fisher very dramatic, but also unfortunately correct about 1930s. Modern tool, inflation targeting. Most central banks today, Federal Reserve, European Central Bank, Bank of England, now target 2% inflation rate as explicit goal. Not zero, not negative, positive 2%. Why 2%? Buffer zone. Keep economy far from deflation territory. Give space to cut rates if recession come. Also account for CPI measurement error, which historically overstate inflation by about 0.5 to 1%. 2% is the sacred grass number. Moo respect 2%. Herd, let do final summary. Because moo sees some cows looking glassy-eyed. Normal reaction. Economics do that. Deflation recap. Prices fall across economy. CPI negative. Sounds nice, not nice. Causes include demand collapse, credit contraction, asset bubble bursting, technological deflation, sometimes okay. Effects include debt burden increases in real terms, consumer spending freezes, unemployment rises, investment stops, businesses fail, banks fail, entire economy potentially enters self-reinforcing spiral. Severity range from mild price correction, manageable, to full debt deflation spiral, catastrophic. See 1929 to 1933. Nominal US GDP fell 46% in 4 years. Tools to fight include monetary policy, rate cuts, QE, fiscal stimulus, government spending, direct transfers to herd, as helicopter grass, as Milton Friedman once described. Inflation targeting frameworks. Greatest risk today, not current deflation. Inflation currently dominant concern in most economies post-2022, but deflationary risks build quietly. When debt levels high, when demographic trends aging, Japan, Europe, soon USA, when technology aggressively reducing production costs, deflation pressure accumulate. Moo is watching. Moo has eyes everywhere. Herd, today we learn. Deflation not just cheap clover. Deflation is trap. Rational behavior of individual cow, wait for lower prices, save grass, pay debt, become collectively irrational when all cow do same time. Economy is not math problem. Economy is psychology problem with math costume on. Moo knows this now. Moo wish moo not know this. If you want see more videos, inflation, interest rates, history of economic crises, why moo cannot afford barn in current market, subscribe to Pasture. Ring the bell. Comment below, are you team inflation or team deflation? Both teams are suffering, but is good to have team.
Subscribe to Investify. More financial videos, real insights, zero fluff. Let's build wealth together.